What if we told you that one of the most important deals of this decade didn't happen on Wall Street? It didn't happen in a boardroom. It took place between two men who, just weeks ago, couldn't stand the sight of each other. Elon Musk and Anthropic, bitter rivals. One building Grok, the other building Claude, cutting a deal that nobody saw coming and sending shockwaves through the entire AI industry. And that is just the opening act. This week, markets hit record highs. Oil took its biggest weekly plunge since the war with Iran began. AMD reminded investors why chips are the new oil. And the Nikkei in Japan broke 63,000. Welcome to your global market wrap, where geopolitics tested nerves, but earnings power and AI momentum kept the rally alive. Let's break it down, beginning with where money is made and lost: Wall Street. The S&P 500 and Nasdaq both hit fresh all-time highs, powered by a relentless rally in tech and AI stocks. On Wednesday alone, the S&P added 1.46%, the Nasdaq surged 2%, and the Dow cleared 49,900, just around 90 points shy of the historic 50,000 milestone that it had hit on February 6th this year. Moving to the Asian markets, Japan and South Korea hit fresh highs, with intense rallies driven by the AI and semiconductor sectors. European markets, meanwhile, remained cautious, as concerns around oil prices, autos, and geopolitics offset earnings support. Oh yes, oil dominated headlines this week too. Brent crude initially surged on US-Iran tensions and Strait of Hormuz fears, before retreating on hopes of de-escalation. It rose again on Friday, amid reports of renewed clashes. Overall, prices remained volatile, keeping inflation concerns, interest rate expectations, and sector rotations firmly in focus. Energy stocks had moments in the spotlight, while the broader market welcomed any signs of cooling. What was behind this? Two words: earnings season. Among the week's biggest movers, Supermicro Computer surged about 18% after strong earnings guidance. Disney jumped 7% on strong streaming and theme park results. McDonald's rose around 3%, proving that even in a war-rattled economy, people still want a Big Mac. The AI arms race stole the show off the charts too. Elon Musk was everywhere. Literally. The courtroom drama with OpenAI continued, including diary detail surfacing, while SpaceX made massive moves. Musk's companies showed the green light to huge ambitions in chips and AI infrastructure. The standout deal? Anthropic struck a major partnership with SpaceX to tap the full compute capacity of the Colossus One data center in Memphis. Over 220,000 Nvidia GPUs, hundreds of megawatts of power. This boosts Claude's capabilities, raises usage limits, and highlights détente and collaboration in the AI ecosystem, despite past rivalries. It underscores the insatiable demand for computing power. AMD and the broader chip ecosystem benefited from the AI tailwinds, with semiconductor indices strong. These stories reinforce that innovation and infrastructure are powering markets forward. So here's what this week is really telling you. AI is no longer a theme. It's the economy, period. The Iran oil nexus remains the biggest macro risk on Earth. Any serious resolution unlocks a massive rally across consumer, airline, and rate-sensitive sectors. The AI arms race is eating its own rivalries. Elon Musk and Anthropic signing a deal is one of the biggest examples. The Fed is stuck. 4 dissents, no cuts, and war-driven inflation. And before you shut the laptop for the weekend, here is your watch list for next week. Markets now turn to Middle East developments, oil stability, central bank signals, and the next wave of AI momentum. Volatility may persist, but risk sentiment remains constructive if geopolitical tensions stay contained. That's your global wrap. Stay informed, stay balanced, and we will see you next week. Till then, trade smart. If you want to know more about global investments, download the Dealing app and subscribe to our channel.